Well, welcome everybody. Steven Sitkowski here. Welcome to our Market Insights. November the 4th, one day before um, the election. Kind of exciting. I guess record numbers have voted in early voting. So seems to be a whole lot at stake here in this particular election. It'll be interesting to see what happens. I don't really have a feel on it, and how that impacts the market. So, quick reminder that everything that we do here is for educational purposes only and not intended as investment advice. What's moving the markets? All eyes are on the election. So you have two very different characters, in some regard. Definitely two very different sets of policies on how to move the economy forward, what to do about taxation at the individual level, capital gains, corporate taxes. They could have a significant impact on the economy moving forward. So I know Wall Street, they've sort of picked who they believe will win, but whether they're right or not, we'll find out in the next couple of days. NVIDIA replaces Intel in the Dow. As a consequence, NVIDIA's stock was up about 1.5% this morning. Next Fed announcement is due out Thursday. So 2 days after the election, we get the Fed announcement. So we got some big stuff going on this week. 10-year Treasury continues to tick up a little bit. We're at 4.303. You know, anything under 4.5, I think, is very acceptable to the market. And oil prices moved up a bit, 70.85 a barrel. They were down below 70 there for a while. What to watch this week? Kind of a slow news week outside of the election and the Fed. Today we have factory orders. They came in right as expected. Tuesday, get the final services PMI. Is that going to change anything? Probably not. Wednesday, we got nothing. Thursday, initial jobless claims. Supposed to come in at 220,000. Wholesale inventories, that's not going to be a market mover. The biggie is going to be Chairman Powell, his announcement, his comments, and his press conference. So we'll be watching that carefully. On Friday, we get consumer sentiment. That's kind of important. Gives us feel for how people are feeling about things. Last week's heat map, lots and lots of red. Big earnings announcement week last week. Some of the big losers, AMD at 10.67, Apple, 5%, Palantir, 6%, Tesla, 5.5%, Lilly at 9%. 1 year heat map, money to be made everywhere, except for Intel, Adobe, Nike, Dollar General, Estee Lauder. You know, there's a few that are down. And then some of the energy sector is down as well. But you can see a lot of green. And it's pretty much across the board. Big winner still is NVIDIA, 216%. Met at 82%. Not bad. Market breadth for the week. So given the fact that we had a down week, market breadth kind of hung in there. On the New York Stock Exchange, 270 new highs compared to 134 new lows. On the NASDAQ, more balanced, 370 new highs, 353 new lows. Earnings growth. So you can see where it was anticipated in the gray, and there where it actually came in. The big disappointment, frankly, was in tech. And it seems like the revenue side of AI hasn't caught up with the expenditures, not even close. But communication services crushed it. Healthcare, pretty much in line. Consumer discretionary did well. Financials beat. Real estate in line. The only real disappointment there, we've had two of them, tech and over here, energy. Energy for obviously reasons, falling oil prices. New jobs, look at this for October, a disaster. Came in at 12,000. Now you might say, we had hurricanes and yeah, but I mean, from 200 and some thousand to 12 hurricanes. I don't know. All of a sudden, employers said, no more. We're not looking for anybody else. Who is hiring? Healthcare and social assistance. And there's the government. You can always count on Uncle Sam and the ever expanding government. And as long as we keep allowing them to print money and raise taxes, they'll just keep spending it. And I'm not sure it's in alignment with, how we would have them spend it, but it is what it is. The big losses were in professional and business services and manufacturing. Manufacturing has just been awful for a while now. Wage growth also declining. So, employees were doing pretty good. Wages were going up, 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 and then they have rolled over. They're heading down. The VIX has been elevated. This is the volatility index on the S&P 500. So consecutive trading sessions above their 200-day moving average has reached 78. So a lot of anxiety out there. We also call that the fear index. Speaking of which, here is the fear and greed index. We're on the lower end of neutral. So people aren't feeling too chipper right now. Frankly, as it relates to the market, depending on what happens with the election, I'm extremely bullish. You've got, earnings have kind of hung in there. They haven't been fantastic, but they've been okay. But interest rates are coming down. That's got to help companies. How much will the Fed cut? Next announcement, 2 days after the election, 98.3% probability that we get a 25 basis point cut. Almost no chance that we get a 50 basis point cut. But you can see, we're expecting 1, 2, 3, 4, 5 rate cuts in the next year. Should be great for stocks. 1 year sector returns. Well, the S&P for the last year is up 31.65%. So if you want to kind of judge how you're performing, if you're up more than 32%, you're doing great. Less than that, you're underperforming the market. Big winner was tech, 44.36. Communications, been strong at 40%. Financials, 37. Industrials, 32. Everything else is underperformed, with down at the bottom of the pack, energy. Earnings this week, we've got Palantir today after the market closes. Builders First tomorrow before the market opens. Devon Energy after the close. CVS Healthcare, Toyota after the close. ARM, this is all on Wednesday. Thursday, we have Affirm, Airbnb, and Friday, you have Sony. So the biggies have already announced. So that's all foregone conclusion. All right, let's take a look at the charts. See what 6-month chart on the S&P 500. So we can see that the general trend, look at that yellow line. That is the 50-day moving average. It has been moving higher. And we have lived above the 50-day, but right now we are sitting right on that level. So what's going to happen? We going to break below, or are we going to bounce off of that level? And right now, I think a lot of that is going to depend on what happens this week with both earnings and the Fed and their comments. And then on the Qs, well, there we go. We are similarly sitting right on that 50-day moving average. So really kind of an inflection point for the market. Now, we have fared pretty well on our trade ideas of the week. We need to update this, but for the first half of the year, we have closed 74 trades, average return 18.9% per trade. That includes the winners and the losers, with an average holding period of 19.2 days. So about a 19% return in about 19 days. Looks like about 1% a day. So it's been a fantastic year for us. Hope it's been a fantastic year for you. But I will see you again next week. So until then, have a blessed week. Be safe. Bye for now.